interpretation, which now I wish I would have gone another day, is a little different of our assignment. And we got assigned, to look at the playbook and give a presentation on some of the service lines. So I started reading through the playbook, and kind of a recurring theme came out to me. And when I met with Scott, we went through this, and we'll see if y'all agree with me. And we'll hit on a service line or two to kind of wrap it all together. So winning with the playbook, the thing that recurring theme through the whole playbook is, what do we do to make money here? All we really do is, so we're monetizing our knowledge for our clients and trying to make the strongest impact on their business. And so when I look through our playbook and the different services we offer, is what do we sell and when do we sell it? And thinking through kind of the logical steps of each of the different services we offer, I started thinking about the business life cycle of a company, which is kind of how this goes. And so as the maturity of a company moves on, the more complex its accounting and operation get. And so as we're in our startup phase, we get a little complex, low maturity kind of fees too, because you get what you pay for. And as we go up, and as we're in our growth phase, we're getting more complex, more established. As we're established, we're doing good, we're a real mature company, and then either you're going to decline, you're going to recapitalize or acquire market share, or innovate to keep moving forward. And so what I did was I picked some of our kind of, not every service because it'd be too easy, too hard to read, and kind of plotted them along this normalized curve on where I thought where each one of these services would be offered. If that makes sense. And so kind of the ones I'm going to hit on are kind of the bookends of this. We're going to talk about outsourced services and then transaction advisory, and the thought of monetizing your knowledge applies to both. And then kind of as we get in here, our traditional services are offered throughout. And then whoever did transaction advisories when you're declining, I thought that was kind of a good spot for that one. And so our first one, outsourced services. All right, so our prospect companies, I spoke with Lila and Sandy a lot about this division. And in talking to them, they said almost every office has a different definition of what outsourced services is, which I found kind of interesting, that there's a lot of stuff under this umbrella. And so I spent more time talking with Lila and Sandy about what the Montgomery office does, tied back to a lot of my stories earlier about my retail company. And so if you go back to my curve here, outsourced services are kind of your foot in the door, the beginning part, to kind of get them up to these higher services that we can offer. And so prospect companies are startup to through established that need a good bang for their buck. They don't have an internal accounting department that can train. They want to have enough money to really, or enough resources to hire a full internal accounting source. And the need would be kind of your typical bookkeeping. Sometimes they come out there, they send somebody else to do more complicated month-end closing entries on the general ledger. And I thought this was kind of interesting. Came across this pyramid, which kind of ties back to my last curve. As business maturity increases, the information that a business owner needs kind of change. So you kind of got to know your audience of what you're trying to serve. So our outsourced services, they're in the beginning part of maturity. What the owners really need is accurate and meaningful reporting to help them make business decisions. And as you go up, what they need from us is as an advisory impact, deeper understanding of their company when we kind of get into audit and tax services, and then a decision and strategy where we do our turnaround or transaction advisory, what they expect. And then as we're monetizing our knowledge, the financial advisory, a little bit of what we heard earlier. So they'll do these things called KPIs, or key performance indicators. And what they'll do, somebody at like a manager type level will get the financial statements from monthly financial reports from the client, do an analysis on anything. This is what they kind of stress, is it could be as customized as you can think of. It could have a return on employee or gross profit per product line, revenue per per day, or pretty much anything that you need to know. And it all starts with a needs assessment is what they call. So you go in there, you get a good understanding of what the company needs, and we've developed these key performance indicators, and then once a quarter or once a year, whatever they want to pay for, someone at Sandy's level will come down and meet with the business owner and give them some good advice on where they need to cut costs, maybe different service lines they need to look into or eliminate if they're not profitable. And then the easiest way in the door is through payroll services. Everybody needs to run payroll. It's very inexpensive. We're very competitive on it. Once they get in there, they're on our little curve to get up there to generate more revenue. And the quantifying the pain, as I said in the beginning part of here, leveraging, they get good bang for their buck, leveraging their dollars. So for $5,000 a month, they could get a CFO type resources, which would cost them almost $150,000 a year at a minimum. And they could get those services for only $60,000 a year. The other is they'll have a strong back office. In my example about my friend's company, where he has no accounting service at all, he has no leverage with banks, can't really calculate his return on any of his investments. And then how we get paid, collecting a check here, the needs assessment, or the initial assessment, will charge an upfront fee, and then usually we'll charge a recurring fee based on whatever services they decided they need. And running along with our kind of monetizing the knowledge, we go to the other end of the spectrum, the transaction advisory, which William kind of already went over most of this. Prospects would be business owners looking for an exit, or institutional investors or buyers that are looking to acquire other companies. Or in the case of our bath company, they're trying to acquire market share by acquiring competitors. They'll hire us to come in there and we'll review the letter of intent. We'll perform some agreed upon procedures based on the risk that we identify going in. And at the end of this, we give a quality of earnings report, or EBITDA adjustments would affect the transaction price. And what we're looking for is one-time costs, or any type of finance-related decisions that wouldn't impact the company if it was running normally. And that's kind of the end.
I got a comment.
What's up?
That layover over that curve, the very first one, I think